Welcome back to Dinar for Veterans. Today we're cutting through one of the loudest rumors in the community right now. The claim that a $5.89 dinar rate is already visible on hidden back screens inside the banking system. If you've worn a uniform, you know the difference between scuttlebutt and a verified order. This update is about separating the noise from the signal, using how real banking infrastructure works, what official processes require, and what visible, documentable progress in Iraq actually looks like. Here's the core of the claim. A handful of insiders supposedly see a 5.89 exchange rate on internal bank terminals, even though the public still sees the current rate. It's a powerful narrative because it promises early access and exclusive knowledge. But that idea runs headfirst into how modern financial systems operate. In the real world, large banks don't maintain one rate for public view and a different, secret rate on a back screen. Their core systems, from retail branches to treasury desks, synchronize through centralized data feeds tied to official sources. When a central bank or global market feed updates a rate, it propagates through connected systems at the same time to keep every ledger, every quote, and every report aligned. That alignment isn't optional. It's a regulatory necessity. If a U.S. bank held a materially different internal FX rate than what it showed customers, audit logs, compliance checks, and external reporting would light up like a Christmas tree. You can't have rogue rates drifting around the network without immediate consequences. It helps to understand what back screens really are. Inside a bank, there are internal platforms where professionals monitor rates, execute trades, and handle treasury activities. They are not secret vaults of better prices. They are professional tools connected to the same data the customer-facing systems pull from. If the Central Bank of Iraq or global FX data providers push a new rate, those tools and the retail systems update in sync. There isn't a hidden layer for a handful of people to see a wildly different number without it hitting the rest of the network. Consistency isn't a preference. It's the backbone of compliance, risk management, and financial reporting. A veteran's way to think about it is chain of command. Policy changes don't slip quietly into a side chat. They move down established channels, are logged, verified, and implemented so the entire formation moves together. If a major revaluation were real, you wouldn't need whispers about a back screen. You'd see a published policy, mirrored across platforms, with guidance rolling out to staff and customers. The idea of a private window for a brand new global rate doesn't fit the operating discipline of regulated institutions. That's why an experienced voice in the community recently offered a more grounded picture of what an actual exchange process looks like. You don't walk up to a teller for large currency transactions. You ask the branch manager to connect you with the wealth manager who covers that region, often for several branches at once. The conversation is professional and specific. Here's the posted rate, here's the spread, here's the fee. The spread is the gap between the central bank reference and the price a commercial bank quotes to you, and sometimes that spread can be negotiated, especially on larger amounts. Whether you ultimately try to minimize fees or focus on spread is up to you, but the point is that this is the real-life path, names, roles, procedures, not a secret screen a few insiders can see while everyone else is left in the dark. It's formal, it's documented, it's auditable. On the technology side, global institutions rely on centralized treasury and core banking platforms. Those systems take feeds from official sources and disseminate rates across ATMs, mobile apps, teller systems, wealth platforms, and internal desks. Mismatched rates trigger exception handling because mismatched rates mean mismatched ledgers, and mismatched ledgers mean risk. The entire architecture is built to prevent that. So when someone says a bank is showing $5.89 to a few people and 0.007 to everyone else, you're being asked to believe that a major, regulated institution is falsifying its own internal books in plain sight. That's not how banks survive OCC, FDIC, Federal Reserve, or external audit oversight. That doesn't mean nothing meaningful is happening. It just means we measure progress the way we measured it in service, by confirmed events on a timeline, not by rumor. One analysis put it bluntly this week. You don't detain powerful figures, reconcile cash on a public ledger, and then line up a White House visit in the same fortnight by accident. Every thread points to a coordinated push. Parliament's calendar, the final cabinet seats reportedly targeted for early July, and a Washington visit scheduled for the 17th lineup with broader policy work, including the oil revenue law that has sat for nearly 2 decades. If that meeting delivers movement on oil revenues and the budget, that's the kind of public, named, documentable action that can set the stage for the dinar to adjust in a way that reflects its underlying economy. It's not sexy, it's not secret, but it's verifiable. It's also important to recognize the psychology at play. Insider rumors trigger urgency because they make you feel like you've got a line on something the masses don't. That can override analysis. But financial systems are designed specifically to prevent that kind of asymmetric access to critical pricing data. Rates that matter are broadcast, not whispered. A major change doesn't hide in a side channel. Veterans know this terrain. When adrenaline spikes, you go back to training. Confirm the source. Check the structure. If the process can't support the claim doesn't stand. Sequencing matters too. A well-known commentator asked the question this week that cuts straight to the rumor mill. What is Iraq's banking reform actually about? New coins? New small notes? Or adding value first? His point was that coins and lower denominations follow a repriced currency. They don't precede it. You don't push small notes into circulation at the old value and call that reform. If a real rate were already live on internal screens, that sequence would be broken. Instead, the reform path suggests the opposite. Build the legal, fiscal, and institutional framework, then let the pricing reflect it. So what would a real rate change look like when it arrives? The Central Bank of Iraq would make an official move, coordinating with global partners. That triggers updates across the financial ecosystem: central bank notices, market data providers, bank core systems, teller interfaces, ATMs, wires, and mobile apps. You would see it on the CBI's official channels and then watch it propagate. Banks would push operational guidance to staff. Media would cover it. There would be no lag where a handful of employees in random branches can see a new rate nobody else can access. That kind of inconsistency would be unworkable for clearing, settlement, and reporting. Real changes are visible, synchronized, and supported by policy documents. As for where a realistic final value could land, another longtime analyst made a case this week that if Iraq positions the dinar near or above Kuwait's current level, around $3.26, that would align with historical precedent. The reasoning is straightforward. Iraq's resource base, from oil to minerals, has historically supported a stronger valuation than Kuwait by a small margin. That's not a promise and not a prediction. It's a historical comparison. The key takeaway is that a rate aligned with fundamentals and announced through official channels is the credible path, not a number that supposedly appears to a few people on a hidden terminal. Meanwhile, there are developments in Iraq that do fit the watch this closely category because they're public and measurable. An Iraqi advisor, Munir Haddad, stated that funds looted since 2003 exceed $2 trillion and that trials of the corrupt will be public, with no red lines on who can be investigated. That is a bold claim, and it arrives as officials prepare for Washington meetings later this month. If that anti-corruption push holds and proceeds in transparent fashion, it materially strengthens Iraq's credibility, its fiscal posture, and its ability to execute reforms. The combination of anti-corruption enforcement, budget alignment, and energy revenue agreements is what upgrades a country's balance sheet and ultimately its currency narrative. Those are the kinds of dominoes that set up a stronger dinar, again, in public view, by policy, not by rumor. For those preparing for the day a legitimate change occurs, keep your expectations aligned with how banks actually work. Large exchanges typically aren't walk-ins. They're scheduled through a wealth manager or a designated branch officer. You should expect standard identification, source of funds questions, and normal anti-money laundering checks. Rates will be quoted off official feeds, and the economics you'll discuss will be the posted rate, the spread, and any fees. Some customers negotiate spreads on sizable transactions. Some focus on service and speed. What you won't do is ask a teller to reveal a secret screen with a number the bank isn't publishing anywhere else. That's not how regulated finance operates. Here's the bottom line for this community. If the rate is real, you will not need a rumor to find it. It will be announced by the Central Bank of Iraq, echoed by major data providers, mirrored in bank systems, and covered by mainstream outlets. It will be the same number on the app, at the desk, and on the receipt. That's how trust is maintained during major transitions, and that's how the system prevents chaos. Your edge isn't chasing whispers, it's maintaining discipline, tracking verified milestones, and understanding the structure that must exist for a change to stick. As we head into the mid-month meetings and watch the policy steps in Baghdad and Washington, stay focused on the events with names, dates, and documents. Parliament's calendar, cabinet completion, the oil revenue law that's been stalled for years, the budget that would operationalize monetary reform, and a visible anti-corruption campaign with stated figures and public trials. Those are the markers to watch. They build the case for a stronger currency the way any mission is built, piece by piece, with accountability. The rest is background noise. To our veterans and families here, your instincts for verification are exactly what this moment calls for. Keep your paperwork tight, your expectations grounded, and your focus on what can be proven. If a $5.89 rate ever becomes real, you won't hear about it on a secret back screen. You'll see it across the entire system, all at once, with the force of policy behind it. Until then, stay sharp, stay patient, and stay with facts.